Adjusting journal entries are necessary to record the accrual basis of accounting, that is, recording revenue when earned and expenses when incurred. Let's take a look at our revenue example. A deferred revenue is simply providing a good or service after cash is received. On the 1st of January, Ben paid $100 for 10 car washes. The company would increase its cash by debiting $100 and increase its unearned service revenue by crediting $100. Then on the 1st of February, Ben decides to wash his car for the first time. So how do we adjust this entry? We do this by reversing the unearned service revenue. There will be a decrease in unearned service revenue by debiting the value of the service provided. Since the $10 is now earned, we can increase service revenue by crediting $10. However, an accrued revenue is when a company have yet to receive cash but is expecting cash due to the good or service already provided. This will increase its accounts receivable and increase its service revenue. Once the cash is received, the adjustment entry must be made by increasing the cash account and decreasing its expected cash by decreasing accounts receivable. Now let's take a look at an expense example. An accrued expense is paying cash after an expense is incurred. An easy example is wages. Today is Sunday and Jerry, who works at the car wash, has made $200 for that week. The company has therefore incurred $200 in expenses that must be paid to Jerry in the future. Therefore, there will be an increase in wage expense by debiting $200 and an increase in wage payable by crediting $200. It is now Tuesday in the following week and Jerry has received the $200. So how do we adjust this entry? As the company no longer owed Jerry the $200, a reverse on the initial entry must be made by decreasing wage payable. And therefore, the cash account is decreased by crediting $200. However, a deferred expense is when cash is paid before the expense is incurred. A company will sometimes prepaid for an expense that have yet to be used. Cash will be decreased as prepaid expense will increase. Once part of the prepaid expense is used, it must be credited, whilst the expense is now debited. To summarize, deferred means before and accrued means after. As the exchange of cash differs from when it is earned and incurred, adjusting journal entries are needed to reverse the accounts. Adjusting journal entries will later be used to prepare an income statement.